Hello, everyone. I'm here. It's Lunchtime Loan Talk with Stuart Johnson. He is with Farmington Mortgage, and he is about as local and as native as you can get when it comes to a local lender. He is from Fairview, and I did not know this, Stuart. You used to be the mayor of Fairview.
Yes,
How cool.
Served the city for 16 years.
Pretty cool. So local lender, we always say use those. This is as local as it gets. So he's with Farmington Mortgage. How long have you been doing this type of work?
Been doing this almost 7 years.
7 years. So I connected with Stuart last year through a client who had already been through the pre-approval process with him. And so I've been pushing clients to him because he does great work. He's really fast and he communicates, which is my favorite thing on the earth. So I have attached his link somewhere in the description above. And so when this is over, if you want to check out your pre-approval process, you can click on that link and get that part of it going. But we're going to talk about the first step when it comes to buying a home. So before I or anyone else will show you a home, we talk about you have to have a pre-approval. So you click on Stuart's link and then he gets you going. So what does that pre-approval process look like on your end of things? What do you need from them? How do you determine, how much they're approved for?
Well, the first thing you have to do when you click on the link is you do an easy online application, and it's going to give me stuff about where you've lived for the last 2 years, where you've worked for the last 2 years, things like that. It's also you're going to list your income in the appropriate boxes, and then that's going to come back to me, and I'm going to run a credit report. And once we get that credit report, it's going to spit us out 3 numbers from the 3 major bureaus. The loan is based on the middle score. So we're going to take that middle score, and then we're going to add all your liabilities into the computer, and it's going to tell me how much you already have that you're paying out monthly in certain bills. Now, it's only the things in mortgage process, it's only going to count against you, or if you have a current mortgage, like you were doing a refi, or if you're selling your home and you're going to buy a new home, if you have student loan debt, if you have credit cards, if you have car payments, those are the things that are going to combine to make your DTI, which is your debt to income ratio. And depending on the loan that we end up going with, there are certain numbers that you cannot exceed to qualify. So it's a very simple process. The application will take you about 15 minutes to complete. Once you get that back to me, I can turn around and go over the entire thing and have you a pre-approval letter out knowing where you qualify for and what amount you qualify for to give to your realtor. So in about 30 minutes total time, us working together, we can have that accomplished.
Now, we'll say this, a pre-approval does not mean that you are approved. I think that's sometimes a misconception.
That is correct. It does not mean that you're already approved, but it means that the information that you have given to me, the preliminary information, I'm taking that on your word that this is my income, this is what my W-2 was from the previous year. These are the things that I want you to base everything on right now. Once we get past that and we go to the underwriting process, you're going to have to turn in those files to me. I'm going to need most of the time 2 years W-2, sometimes full tax returns. I'm going to need your 2 most recent pay stubs. I'm going to need a copy of your driver's license, stuff like that. Once we go through that process, then the underwriter puts their final stamp of approval on it. We go to the closing table.
Right. So how do we determine what loan we qualify for? So there are various loans. You've got your VA loan for veterans, your USDA, your FHA, and your conventional loan. So how do you determine what's best for somebody?
Okay. So VA loans, if you're a veteran or you're currently serving, those loans are off to the side by themselves. They are a tremendous program to take care of that person with low interest rates. And the key thing about those is you do not have to have down payment money to purchase a home. You also never have mortgage insurance with a VA loan. VA loans are great. You have to qualify for a VA loan as a veteran or the spouse of a veteran or something, or actually an employee of the government themselves to actually do that. When you go to an FHA loan or a conventional loan, then we're talking in what kind of money do you have for your down payment? If you have 3.5% down saved up, then we're going to do an FHA loan. If you have 5% or more that you can put down on your loan, then we're going to do a conventional loan. Conventional loans with good credit carry lower PMI, private mortgage insurance. The FHA loan carries a little bit higher, but they also will take lower scores on other things to make it possible to qualify for that. Then there's the fourth loan that we do, which is a USDA loan, which is also like a VA loan, except for anyone can do this if they have at least a 620 credit score. They do not have to bring any down payment either. It is a 100% financing loan in certain areas. Like there are certain areas in, like just say Davidson County, there are areas that you don't qualify. There's not an area set up by the government saying this is an area. Now you go to Dixon County and parts of Fairview and Williamson County and southern Williamson County, those areas open wide open, and you can put a USDA home loan in those areas.
Now we talk about down payment with these loans. That is separate from closing costs. And I think sometimes people get that a little confused. They think that, the total money brought to the table includes both the closing and the down payment. And those are two separate things, correct?
Two separate things. Absolutely. Your down payment funds, they are derived from the purchase price of the home. So if you went with the FHA loan, you're going to have to put down 3.5%. Now, with that, in conventional loans and FHA loans and stuff, you are allowed what's called gift funds. So if you don't have the money in the bank, a family member can gift that money to you for the purpose of the down payment on that home. So a mom or dad could give you the money, a brother or a sister, an aunt or uncle, just as long as it is a real relative to you, they can give you that money to assist you in that down payment money.
Right. And with my FHA clients, we have been rolling their closing costs into that loan as well, because we're just so competitive, and you can't ask a seller to pay closing costs right now. It's just absurd. So, so we've got our loan type picked out. They've got their pre-approval. They've picked out their home. Now, what do they have to do? They have to go through the full step of, okay, now I have to turn in all these documents to you. What is that process like? Who does that go to once you've gathered that information?
Okay, so the first thing we're going to do is, once we get through to the point where you actually have an executed contract and you send that back to me, I'm going to get with the borrower again, and I am going to have several things, pertinent information, like their last two pay stubs. If they haven't already sent those to me, I have to have their last two pay stubs to turn into the underwriter, W-2s, copy of their driver's license. There are some forms that they will actually have to fill out to give us the ability to make sure that their tax transcripts match what they sent us, Social Security information. There are some credit documents that have to be signed. Basically, at that point, we're going to lock their interest rate in. Interest rates are at record lows, and that goes across. It doesn't matter any of these four loan products that we've talked about. Rates are incredible right now. We're talking.
Now, how do you determine somebody's interest rate? Because I think a lot of people are just like, low interest rates, I can get like 2.5%, but that's not always the case, because that also depends on their credit score.
It depends on their credit score. What is considered elite credit is anything 740 and above. Credit scores do go into the 800s, but 740 and up, you're going to get a great rate when it comes to locking in your loan. If you are anywhere from, between the 620, which is the minimum on some of these products, up to probably 680, you're still going to qualify. You still got good interest rates. They're still going to be at three or under in a fixed rate. So that is quality. That's quality interest rates right now on any of that currently. Yeah. It also takes into consideration their debt to income ratio and their loan to value on the house. So the more money that they're putting down payment wise also can affect the interest rates. But just say you had a 680 score and you were doing a 30-year USDA loan right now, you're looking at could be as low as 2.5% fixed, which is tremendous.
That's crazy. So, all right, we've locked in our interest rate. Now, what are you going to do with it?
Okay, so once we have that locked and I have all this information in, I'm sending your file to processing. She is going to, at that point, take everything, get it in order, and send it to the underwriter. The underwriter is going to look over all the documentation, make sure everything's signed in the right spots, make sure all the pay stubs are up to date, make sure the tax returns match what you sent us based on the IRS transcripts that we pull. And at that point, they're going to say, okay, this borrower has met all the obligations here. Everything looks good. We're going to give the approval and we're going to go to the closing table for them to purchase this house. Sometimes during that process, at the end of that, they will give what is called a conditional approval. Mm-hmm. And they say, hey, this pay stub went out 10 days ago. Send us your most recent pay stub so we can update it. You've had a pay stub since this process started. At that point, you just send that in. Then they'll give us the CTC, which is everybody's loves that, the clear to close. Then we're going to head to the title company. We're going to sign the documents and you're going to get the keys to your new home.
Yeah. So are there any tips you have for somebody who may not think that they can pre-approve today, but they want to buy a home? So what are little things they can do to maybe work towards the bigger goal here?
The main thing is people really don't understand the full process, and they think, well, my credit's not good enough, or I might have too much debt, or you really don't know until you put yourself out there and you try. There have been so many people that said, I've been wanting to do this for 5 years, but I didn't think I qualified. They send me their application and they immediately qualify. So what you need to do, what you can do on your end, keep up with your credit score. Make sure there is not something on there negatively affecting your credit score, because that can hurt you for years to come.
Are they able to come to you and kind of get you to maybe look it over and say, so you could give them an idea of, hey, you do this and 6 months down the road, we could get you in a home?
Absolutely. Now that is part of our pre-approval process. And before you do an application, feel free to call or email me with any questions, and we can talk about things. Because if you know there is something that is going to prohibit you, I can work with that. And what we have is in areas where people's credit might not be meeting that, we have a program that is free to the borrower that we offer. It's called a rapid rescore program. And what we do is we put the information into the computer from the credit company, and it tells us scenarios of what they need to do over the next few months to get their credit score up. Once they do those things, they can send me the documentation back. We upload it into the system, and usually in 48 hours, we'll get their new score issued. If it gets to where we need it to be, we can then issue the pre-approval letter and start the process. So that's a free service that we offer.
So I've said this at the start, Stuart is wonderful to work with. I appreciate you so much coming on here and explaining all of this. I think sometimes it just becomes very overwhelming for people. So I really appreciate you kind of breaking it down for us. He's super fast. He answers me whenever I text. Seriously, it's so wonderful. It is such a breath of fresh air. So, Stuart, thank you so much for coming on here and just rattling off all this great information for us. Again, I have put his link up there. So if you want to check it out, again, he told you that, even if you don't know if you are able to qualify right now, he can help you in that process. So check him out. I will also leave his email and all that good stuff in the comments below. So thank you again, Stuart. And
you're very welcome.
Hope everyone has a wonderful Monday. We appreciate you watching with us. Thanks.
Make sure you tell them that 7 days a week. I'm just like the realtor. I work all the time. So if it's a Saturday afternoon and you're sitting there and thinking about it, call me up. If you don't get me, I will call you back within an hour.
And he really will. He was in the middle of a ball meeting and just shot me a text back real quick. So, yeah.
Communication is key.
Yeah, it really is. So we appreciate it. All right. Thanks, Stuart.
Thank you very much. Have a great day.